our national anthem. Thank you, members. Now to have the formal introduction of our today's first speaker, the CA Shashank Mehta, I would like to request our past convener and our co-group member, CA Chintan Bhai Shah, to formally introduce the today's first speaker.
Yeah. स्पीकर पे नहीं आ रहा क्या
ये कैमरा ऑन करना है
ऑन
नहीं ये ऑन नहीं
है स्पीकर कैमरा तो ऑन है
कैमरा तो ऑन है ना सर ये वाला ऑन किया
ये तो ऑन ही है ना
नहीं है अरे ऑन है बाबा देख
जी सर ऑन ही है बंद क्यों किया ऑन ही है
ये आया नहीं अभी तक
ये तूने छेड़ा क्या क्योंकि पहले आ रहा था
हाँ बीच में बंद हो गया
क्या नीचे स्क्रीन नहीं आ रहा स्क्रीन पे बोल जाना परफेक्ट स्क्रीन अब वो पीपी डालना है बाद में कर लो मैंने डाल के छोड़ दिया कैमरा ऋषभ बंद हो गया कैमरा बंद हो गया
Morning, members. Technical snags. As we are recording this for the members' benefit in futures, we are just trying to set up that. So, thank you, Jayesh Bhai, for this pleasant task of introducing the speaker for the day, Shashank Mehta. He is associated with the law firm DHJ Legal and also having his proprietorship CA firm, Shashank Mehta and Associates. He's a content writer on blogs summarizing judicial pronouncements. He's contributing articles in journals of various forums, ICI, AITF, CTC, Taxman, etc. He's also a speaker at various webinars organized by study circles of ICI and other professional forums. He's a visiting faculty at the CA Institute coaching classes, the coaching which is conducted with C Institute. And his core area of practice is income tax litigation, representation, and advisory. So with these words, may I please request Shri Hemant Bhai Gandhi to present a memento to the speaker, Shashank Mehta. So may I now request the speaker to please start the session.
Yeah, or any of the books if you are required. You can place the order. The same discount, the same discount.
क्या कर रहा है? कुछ नहीं, वो नहीं है, बोल रहा है ना, क्यों नहीं? कैमरा तो तेरे सामने चल रहा है, तो क्या बोल रहा है? ये देख ना, हो तो रहा है। सर कैमरा ऑन है कैसे? कैमरा नहीं ऑन। ये वाला
ये है ना, वो पूर्वी का है, वो चल रहा है।
ये वाला ऑन नहीं तो आ जाएगा। हाँ हाँ
आ जाए। कीप रिकॉर्ड, जिस
सर इसको हटाइए ना।
सर ये मिनिमाइज कर दीजिए। Now just do this. Yeah. Make sense? Yeah. You just minimize it. Yeah. I don't like that. Or it's perfect. I think this should be fine. Yes.
सॉरी, और माइक पॉइंटर, ये पॉइंटर है,
चलेगा। देखिए आपको बता दीजिए।
हाँ एक मिनट
नहीं चलेगा, यहाँ this is fine.
Very good morning, one and all. There are two events right now which are going on, which has brought in certain kind of doubts and uncertainties. The very first event I'd like to mention is about the decision rendered by Honorable Supreme Court in the case of UI versus Ashish Agrawal. The uncertainty is how to respond to the notice which are issued pursuant to that particular decision. I hope as of now, most of you must have filed objections. Now, next step, whether to go with the assessment proceeding or to go the writ route, all this kind of confusion will now be, emerging. And the second uncertainty or the event I like to mention is regarding the political crisis of Maharashtra. Yesterday, I was visiting Surat for the lecture at Surat Study Circle. And I was traveling, Navnath ji called me up कि सर आपका पीपीटी आया नहीं है। मैं बोला ठीक है, मैं ट्रेन में हूँ, सूरत जा रहा हूँ, भेज रहा हूँ। So he was like, सर कल आ रहे हो क्या? I'll come back to Mumbai. So yes, amidst this all kind of uncertainties, we also have the season of so-called tax return filing and tax audit report filing, which is coming up. This particular session will be confined to the changes which have been brought in the ITR form for assessment year 22-23, as well as some of the retrospective amendments which have been inserted by Finance Act 22. So I have divided this particular presentation in these two categories. Before starting this lecture, I would like to thank the conveners, the coordinators, and the entire team of the JB Nagar Study Circle to give me this opportunity to be among you all today.
and present my lecture on this particular topic. Now, as Jayesh Bhai mentioned earlier, every year, there are certain changes which has been brought up in the ITRs. Fortunately, in this year's ITR, there are few changes, I'll say, and most of them are, most of them are like presentational changes. However, certain changes are, very important, which has been brought by retrospective amendment of Finance Act 22. Okay, which even needs to be considered while filing the return of income for assessment year 22-23, which I have covered up in my this particular presentation. Okay, so from last 5 years, we have been seeing that the government is proactive in at least notifying the ITRs. So this year also they have timely notified the ITRs. I will say the ITR 1 to ITR 6 were notified on 31st of March 22 by notification number 21, and ITR 7 was notified on 1st of April. However, the utilities were not out up to May end. Only ITR 1, 2 and 4 were available up to May end. Thereafter, ITR 3 was enabled. Presently, if I talk about today, ITR 5 recently was enabled, I think a week ago. There is no ITR 6. There is no ITR 7. So these are the kind of, things which needs to be taken care of, that even if you are notifying the ITR, what is the use of it if you're not coming up with the utility itself? So yes, notification is done. Second point, there is no change in rule number 12, which provides for the eligibility criteria for filing the ITRs. So there is no amendment in rule 12 except the assessment year change. So all the eligibility conditions which were there in the previous year's ITR continue to exist even for this assessment year. However, we'll have just a small brief roundup as to what kind of ITR is required to be filled by what kind of person or assessee. ITR 1 is required to be filled only by resident and ordinarily resident. R and NOR cannot fill up ITR 1. Second point, an important point which I would like to point out is if a salaried individual is having 2 SOP and is earning only salary income, nothing else, still he will be required to file ITR 2 and not ITR 1, because ITR 1 can be filed only by a person who is having only 1 house property. So even though you can treat 2 of your house properties as SOPs now, however, in such cases, you will have to file ITR 2 and not ITR 1. So this is one of the common mistakes which is being, noticed in the ITRs filed by the assessees. Now, what are the kind of persons who are not required to file, who are not eligible to file ITR 1? First, if you're a director in any company, if you have invested in unlisted equity shares of any company. Third is the case where TDS is deducted under section 194 capital N, that is TDS on cash withdrawals. So in such cases, you cannot file ITR 1. And the last case, if you have deferred your income tax payment on the ESOPs. Now, this is the topic which I'll be covering up in detail in the later part of my presentation. So for the time being, we are just skipping it. ITR 2, as you all know, it is for the individuals and HUF who are not carrying on any proprietorship business. ITR 3 for the individuals and HUFs who are having income from PGBP. ITR 4, our favorite, that is presumptive taxation. Even the ineligibility conditions which are there in ITR 1 exist over here. ITR 5 for the firms, AOP, etc. ITR 6 for the corporates, and ITR 7 for trust, institutions, research center, etc. So there is no eligibility condition में कोई change नहीं आया है in rule number 12. Now, Finance Act number 2 of 2019 had introduced 7th proviso to section 139 subsection 1. Now, what is 7th proviso? 7th proviso states that in certain kind of cases, in certain kind of transaction, if assessee is carrying on, then irrespective of his total income, even if his total income is less than the basic exemption limit, still he is required to mandatorily file his income tax return. So in the 7th proviso itself, they had provided for 3 kind of transactions, and the 4th one was ancillary, that may be notified in the later stage. So what were these three transactions? The very first one was the assessee deposited an amount or aggregate of the amount exceeding rupees 1 crore in one or more current accounts maintained with a banking company or a cooperative bank. So this particular condition was for the assessees who were carrying on business. In the current account, if the deposit is exceeding 1 crore, then yes, they are required to file ITR irrespective of the total income. And please remember, this is deposit. The word used is only deposit, amount deposited and not cash deposited. So entire receipt side or the entire credit side or the entire deposit side, if it is exceeding 1 crore, irrespective of whether it has been received by cash or your account pay check, demand or whatever it is, such kind of person is required to file the ITR. Second, if the assessee has incurred expenditure of an amount or aggregate of the amount exceeding rupees 2 lakh for himself or for any other person for travel to a foreign country. So if you are incurring an expenditure in relation to foreign travel for yourself or for any other person, and the amount exceeds 2 lakh rupees, then yes, irrespective of your total income, you are required to file the ITR. It can even be nil ITR in certain cases. Then the third condition, that particular assessee has incurred expenditure of an amount or aggregate of the amount exceeding rupees 1 lakh towards consumption of electricity. So they have linked this particular amount with consumption of your electricity. If you're consuming such a huge amount of electricity during that particular previous year, and in that case, irrespective of your total income, you're required to file your ITR. Now the fourth condition fulfills such other condition as may be prescribed. This was the condition which was not yet notified. However, in the month of April, 21st of April 2022, they have come up with certain additional conditions. These conditions are also such that such kind of assessees are mandatorily required to file their ITR, irrespective of their total income. So the first condition is if the total sales turnover or gross receipt, as the case may be in the business, exceeds rupees 60 lakhs during that particular previous year. So this is particularly in respect to the business person carrying on business. Now, the intricacies or the litigation with respect to what constitutes your sales turnover gross receipts, nothing is clarified in this particular notification. The same litigation which was there for 44 AD, 44 AB, whatever it was, even will continue in this particular provision. Second, if the gross receipt in profession, so specifically they have defined profession exceeds rupees 10 lakh, and in such case also such person is required to file the ITR. Third one, important one, if the aggregate of the TDS and TCS during that particular previous year exceeds an amount of rupees 25,000. So your TDS plus TCS, both, if it is exceeding 25 lakh, the credit is exceeding 25,000, sorry. Then in such cases, that particular assessee, irrespective of his total income, is required to file his ITR. In case of senior citizen who are above the age of 60, this amount has been increased from 25,000 to 50,000 rupees. Okay, so there such kind of people are required to file the ITR. Last, the deposit in one or more saving bank account of a person in aggregate is rupees 50 lakh or more during the previous year. Again, this will now cover all kind of assessees, especially if they have mentioned saving bank, we'll consider individuals. So irrespective of they are carrying on any business or not, if the total deposits in the bank account exceed rupees 50 lakh, they are mandatory required to file the ITR. Again, this is not cash deposit, it's only deposit. So it can be any deposit. So this was with respect to the 7th proviso and the notification. Finance Act 21 has introduced a new provision, a beneficial provision for certain kind of senior citizen. Section 194 capital P, it provides for deduction of TDS by the banks on the income of that particular senior citizen assessee. In such cases, if the bank is deducting TDS at the rate in force, then that particular senior citizen assessee is not required to file his return of income. It's a beneficial provision. In this case, the bank will be the banks which are scheduled bank notified by the ITRs and they are agents of the RBI. The rate of TDS in this case will be as per the slab rate of that particular individual. The bank will compute the total income of that particular senior citizen. They will also allow you the credit of 87A, that is chapter 6C, even rebate under section 87A. They will deduct it, and after that, whatever your income is, they will deduct the TDS on it. Now, what are the conditions with respect to this particular senior citizen? The first condition that particular senior citizen has to be a resident individual. Second, he has to be at least of 75 years or more at any point of time during that particular previous year. Third, he should have income only from pension. So no other kind of senior citizen can avail this particular benefit. Only pensioners can avail this particular benefit, and that too, that pension has to be received in that particular specified bank. That is a scheduled bank who are agents of the RBI. Now that particular senior citizen can also earn interest income from any bank account which is maintained with that particular specified bank. So any bank account, it can be your saving, it can be your FD, it can be RD, it can be any bank account, but it has to be with that particular specified bank and no other bank. So interest income also, they will add it to your total income. Your pension will be added, and then they will compute the total income of that particular senior citizen, and then they will also deduct TDS under 194P as per the rate in force, that is as per the slab rate. And if all these things are done, then that particular senior citizen is not required to file the ITR. However, that particular senior citizen is required to file a declaration like we have 15G, 15H, the same identical declaration, a very simple declaration is required to be given in form 12BBA, so that the bank will, appropriately deduct the TDS, etc. things. So that was section 194P. Now I come to the topic of changes which are brought up in this particular year's ITR, that is ITR of FY 2023. In this particular slide, if you notice, I have highlighted the second part, that is relevant instructions. So changes in ITR and relevant instructions. This is highlighted for the reason that there are no instructions out yet. I think this is the end of, I know we are about to end the month of June now. It's 3 months now from the end of the relevant assessment year, but instructions to the ITRs are not yet out. So for us, professional, it is fine. But what about those individuals who are trying to file the return by themselves? As such, government बोलती है कि आप खुद से करो, इनके पास जाने की जरूरत नहीं, उनके पास जाने की जरूरत नहीं है. But how will that particular individual or particular person will file their ITR if you are not even releasing the instruction module? So instruction modules were released at least belatedly up to last year, but अभी तो 3 महीना हो गया. But instruction modules are not yet out. Instruction module का relevance है कहीं कहीं जगह पे, I'll point it out. So very first change, a very procedural or just a presentational change in the ITR is with respect to the conditions of residentiality status. In Finance Act 2020, we have seen that there are amendment which has been brought up. There are specific kind of criteria which they have inserted, especially related to the domicile, country of residence, income from Indian sources, or I can say income other than foreign sources. So the very first 2 conditions which were there already existed, which are uncolored. They remain as it is. The third condition was also there. It was in respect of the person who was employed in a ship when moved out of India. That condition was already there in the Act, but it was not there in the ITR. So now they have, specifically provided that drop down. You can select that in case of a member of a crew of an Indian ship. The last one also, in case of citizen of India or a person of Indian origin who is visiting India, in that case also there was initially only one condition, that 182 days or more in that particular previous year, and another condition was at least you should be there in India for 365 days or more during preceding 4 previous years. So this condition was already there, but it was not there in ITR. So now they've inserted it, and along with that, the second one, the new one, that is at least that person of Indian origin or citizen of India should be in India for at least 120 days. And along with that, 365 days or more during last 4 assessment year. And the third condition, that is income from Indian sources. I'll say just for the sake of convenience, if it is exceeding rupees 15 lakhs, then he will be considered as resident and ordinary resident in India. So these are just the presentational changes. Identical changes for resident but not ordinary resident. We have seen under section 6, clause 6, this concept of deemed NOR now, which has been introduced. Section 6, clause 1A also relating to domicile. So all these conditions are also now incorporated in the ITR so that appropriate conditions can be selected. The last one is the new one, even the second last one. Accordingly, based on the assessee, you have to select the particular option. Just a presentational change. Now the next change in the ITR is with respect to the spatial economic presence. The concept of spatial economic presence emerged after the development of digital economy, virtual economy, I can say. In last 5-6 years, we have been seeing there is, enormous rise in this kind of economy where everything is being done on cloud, online. There is no requirement of any physical presence. So this was a concern as to how to, how to tax such kind of entities which are operating from other countries, from server which are there in other countries, but still they have consumers, they have their customers in India, and they're making money from India. So this was not just a problem which was faced by India, but throughout the globe. So this was discussed in OECD, G20 summit, BEPS, etc. And pursuant to that, in Finance Act 2018, they had come up with this particular concept of SEP. As you all know, Section 5 provides for the total income. What will be the income which will be included in the total income of a person? It also includes an income which is deemed to accrue or arise in India. This particular concept of deemed to accrue or arise in India is again, more elaborately defined in Section 9. Section 9, one of that, criteria is business connection. So if you are having a non-resident is having a business connection in India and is earning income from India, then that particular income will be deemed to accrue and arise in India, and accordingly it will be taxable in India. So by Finance Act 2018, they had brought in this concept of SEP, whereby they had expanded the scope of business connection by inserting an explanation 2A to Section 9, subsection 1, clause 1. In this particular explanation, they provided that if you are having SEP, if a non-resident is having an SEP in India, then it will be considered as a business connection in India. Consequently, it will be considered that यहाँ से India से जो income मिला है, that is deemed to accrue and arise in India. So what are the criteria? If you meet that, then it will be considered that you are having SEP in India. There are two criteria. The first criteria, it reads as any transaction in respect of any goods, services or property carried out by a non-resident with any person in India, including the provision of download of data or software in India, if the aggregate of the payments arising from such transaction or transactions during the previous year exceeds rupees 2 crore. So now, if a non-resident is dealing with any person in India, whether it can be in respect of goods, it can be in respect of any services, or even it can be acquisition of any property, or specifically they have also provided any downloading of data or using of software. So now any payment which are arising out of this kind of transaction, if it exceeds 2 crore rupees, then that particular non-resident entity will be considered having SEP in India. Only one small intricacy, or I can say point which I like to point out over here is they have used the wording if the aggregate of the payment arising from such transaction. Now, what is the use of this word arising? See, if they would have used the word directly, if the aggregate of the payment from such transaction, then it was very clear that by payment, you have to check payment wise in the year whether that payment has been made or not of 2 crore. If actual, if there is actual outflow of 2 crore rupees during that particular year, yes, SCP established ho jata hai. Now, if they have used the word arising, now arising in my interpretation, I think it will be like on billing basis. So if they have raised the invoice of 2 crore rupees or above, then in that case also, even though actual payment is not made of 2 crore in this particular assessment year, but still it can be considered as having SCP in India because of the use of the word arising. The second condition is systematic and continuous soliciting of business activities or engaging in interaction with 3 lakh users in India. This is also a new condition. This has been brought up especially to cover OTT platform which are emerging nowadays. What the OTT platform do is everything is in a foreign country. They just give a link over here. You have to pay your subscription fees and you can access their portal. So in this case also they have provided that if in India your users are more than 3 lakh, then yes, you will be considered having your SCP in India. So यहाँ से जो subscription आप amount pay करते हो, okay, then that will be the income which will be deemed to accrue and arise in India. Accordingly, they will be considered as having SCP in India. Accordingly, it will be amount which will be taxed in India. So this is the manner in which they are curbing such kind of virtual economy from escaping the taxation. A very small change with respect to pensioners, as I mentioned earlier. Here, earlier, you just had to select one option, whether your assessee is pensioner or not. Now they have just given out various kind of criteria of classification, whether it is central government pensioner, state government, or a public sector utility, or others. That's it. A very small change. Yes, coming to this point, that is deemed dividend, as we generally commonly say, section 2, clause 22, subclause E. It provides that when a company, specified company, I will say for the sake of convenience, private company, if such kind of companies are giving loans to a specified shareholder having XYZ threshold amount of shareholding 10%, then in such case, the amount, even though they are classified as loan, but it will be taxable as deemed dividend in the hands of that particular shareholder. Now, this law is already there since many years. In the ITR, what they have given is that you will have to report it separately. Earlier, we had only one classification, that is dividend income. You have to club everything in that. Now we have to show it separately. Only one small technical, hyper technical aspect. The section which they have mentioned over here, which I have highlighted, is 2, clause 22, subclause E, and there is again one bracket Roman 2. Now, if you pursue the BAR Act, there is nothing like this 222E clause 2. Now, clause 2 is under the proviso to clause E. Now, what is proviso to clause E? It will provide you the exception which will not be considered as deemed dividend. So, in typing this particular section, I think there is some punching error. So, if you go by literal, numbers, you will land up in a situation where actually that amount is not dividend itself. Then how are you liable to report over here? But it's a technical snag. I think they will rectify it. Just a small thing. Ceiling on the rate of surcharge of dividend, very important. As we all know, after the abolition of DDT, dividend distribution tax, the incidence of payment tax on the dividend income is on the recipient, that is on the shareholders now. However, there was disparity with respect to the surcharge which was being levied on individuals and corporates. So in case of individuals, the surcharge can go up to 37%, as we all know. However, in case of corporate, it was restricted to 7%, 12%, etc. So in order to remove this disparity, they have provided the ceiling limit by dividend income in case of individual or HUF or whatever it is. The surcharge on that particular dividend income के ऊपर का जो tax रहेगा, that will be restricted to maximum of 15% once your total income exceeds ₹1 crore. So this is just to bring the parity between the corporates and non-corporates. That's it. Nothing to enter over here. Yeah, another important concept. Now, dividend, taxability of dividend and classification of dividend. Very important point. Generally, we classify dividend as income from other sources. Section 56, subsection 2, clause 1. There are judicial precedents which says that if at all you are assessee who is dealing in shares and securities, then the dividend income which you are earning can be classified as your business income. There are decisions which are in favor, there are decisions which are against it. So especially there is Gujarat High Court decision which favors assessee. So in such cases, when you're crediting your dividend in the P&L account, obviously against that you can claim your expenses also. Accordingly, your profit can also reduce. So if you're claiming against 56 in IFOS, there are restraints. There are a lot of litigation in 57 clause 3. So these kind of restraints were not faced when the dividend income was classified as PGBP, subject to the approval, acceptance by the department also. But now, what they have done is, in the ITR, they are mandating you to reduce your dividend income from your profits and gains. So this is a change which has been brought down in this particular ITR, that you have to mandatorily reduce your dividend income from your profit and loss account, even if though you are, over this year you have been classifying it as a business income. So these are the case laws. The one in blue are in favor, the one in red is in against. Even Mumbai Tribunal to some extent is against. So this is that particular schedule where you are required to reduce that amount. Now the implication of this is, how can an ITR form mandate something which is permitted by, judicial precedents. So in this case, I will take a stand that we have Supreme Court judgment, we have Bombay High Court also judgment that the forms or ITR cannot override the act itself or the interpretation which have been, given by the Honorable High Courts or Supreme Court. So definitely if the amount involved is very huge and if it is a matter of classification is that important, then definitely we can take that particular stand. So this is also one of the changes in the ITR. Schedule FA, one of the schedule, I think it was introduced 3-4 years back and it has been continued. Just a revision of it. If a resident is having any foreign depository account, custodian account, equity or debt interest, any kind of asset, immobile property, such kind of things is holding in India, even though he's a resident in foreign country, assets of foreign country, then in that case, he's required to report in the ITR what kind of financial interest, what kind of income and what kind of asset he's holding in that particular foreign country. Now these are the conditions, these are the points which were listed in the instruction module of ITR. So these are the points which are, actually required to, know the classification or clarification कि भाई इस particular field में हमको क्या report करना है, किसको report करना है. All these things are not in the act, all these things are not in the rules or even in the notification, but they are there in the instruction module. But ये साल का instruction module अभी तक आया नहीं है. So these are the points which were there in the last year's instruction module. So for FA, if you are resident in India, you are required to furnish details of any foreign asset, etc. Resident, you can be either, the foreign interest or foreign asset, you can be either beneficial owner or beneficiary or even a legal owner. Any of these you are, then yes, you are required to report it. In case you are both legal as well as beneficiary, which in most of the cases can be the case, then in such case you have to select the option of legal owner. This schedule is not required to be filled up if you are not ordinary resident or a non-resident. So it is only for R and OR. Details are required to be reported even if the specified asset is held even for a single day. So even if you are having that particular asset on just for one day, still you are required to report it. Now this particular schedule is over and above the reporting requirement which are mandated under Schedule AL, that is Asset Liability Schedule. Asset Liability Schedule is required to be filled up when your total income exceeds 50 lakhs. So in that particular schedule also you are required to report the assets and liabilities which you are holding, irrespective of the reporting made in your balance sheet or P&L, whatever it is. But now what they have provided over here is that FA schedule is over and above that AL. So AL में अगर आपके पास कोई foreign property है तो AL में तो आपको उसको दिखाना ही है. Over and above that, even in FA schedule FA also you have to disclose it separately. So that is one of the points which should not be missed out. Exchange rate in case of for the purpose of conversion will be the rate adopted by the SBI TTBR rate. Now this is one of the change which has been brought up in Schedule FA. Up to last year, this particular Schedule FA provided for a phrase that you have to report the asset which are held by you in the foreign country for the relevant accounting period. Now what is relevant accounting period? Nowhere defined in the act, nowhere in the rules, nowhere in the notification, but in the instruction module. So in the instruction module, they have provided this particular definition, or I can say criteria, कि by what is relevant accounting period. So they are provided for 3 kind of criteria. कि by आपका foreign country में reporting, if it is financial year wise, April to March, then what should be reported in India. If the foreign country is following calendar year, then in such case, what is to be reported in India. And if the foreign country is following any other sort of year, then in that case, what is required to be reported in India. So all these things were creating a lot of confusion as to how to report this particular foreign asset in India for the relevant assessment year. In order to clear off this particular confusion, in this year's ITR, they have now straightforward provided that this reporting has to be for calendar year ending as on 31st December 21. So very simple now. So in short, we are following calendar year for the purpose of reporting of in Schedule FA. So what does this mean? From 1st of January 21 till 31st of December 21, if you are holding any kind of foreign asset, you are required to report in the ITR of assessment year 22-23. Now, the very first 3 months, that is January to March, even though they pertain to assessment year 21-22, but still you are required to report that in AY 22-23 because we are following this calendar year for the purpose of Schedule FA. Similarly, the last quarter, that is the last 3 months from January 22 to March 23, this particular quarter, even though it falls within AY 22-23, but still you are not required to report the foreign asset held during this particular 3 months in ITR of AY 22-23, but you have to disclose it in the subsequent year's ITR. So this is the confusion, I think, which they have cleared off now. Coming to Schedule CG, that is capital gains. Yes, sir. Yes, ma'am. Yes. Okay. Yes. Ma'am, to my opinion, this particular instruction or this particular changes has been brought only in Schedule FA, where you are required to report only the asset which has been held. With respect to TDS and disclosing of income, our regular interpretation कि भाई आपने income offer किया है तो उसके सामने का आप TDS ले सकते हो, all these things will apply. But this particular change of calendar year is not with respect to that aspect of TDS or income disclosure. Okay, yes, yes. Yes, 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 yes. According to me, madam, that has to be as per your assessment year. So that will be from 1st of April to 31st of March. Yes, yes. Only with respect to disclosure of your assets, not income. This particular aspect will apply. Sorry? Yes, this is just a reporting requirement where you are required to report that particular income during that particular calendar year. This particular schedule is a reporting schedule and it is not linked with your total income schedule. So nothing to worry about it. It's a reporting schedule. Now, Schedule CG, capital gains. In this schedule, if most of us might be using the softwares. So this particular option was already there in that particular software's private software. What was the date of acquisition of the property which you sold in this particular assessment year? But this particular date was not required to be reported in the in the utility which was given by the government CBDT. In software, they used to take these dates just to calculate the period of holding. But now, even in the government utility, they have inserted this particular clause, specifically what is the date of acquisition of the property which you are selling it. This will help them in calculating the period of holding, as well as it will help them in having a track on the exemption limit, criteria of 1 year, 2 year, 3 year, under 54, 54 EC, etc. So that is just a reporting requirement. We just have to report what was the date of acquiring that particular property. That's it. Now this is the schedule, one of the schedules of capital gains, where again this requirement is there that if you're, if you sold a property which was acquired prior to April 2001, then in that case they have given this instruction that you will have to mention the date of acquisition as 1st of April 2001, and you have to take the FMV as your cost of acquisition. Now, if I again go a little bit of technical or hyper technical, if I read section 55, definition of cost of asset, in that particular section, it is mentioned that if you are acquired a property prior to 2001, April 2001, then in that case, you have two options. The one is you can take FMV as of 2001 or you can take actual cost of acquisition. Just a technical issue that the particular IT guy who has written this particular instruction has only mentioned FMV as of 2001. Just a minor point. If you see the underlines which are made in the bottom, the utility itself will tell you what was the period of holding, and they will classify whether it's long term or short term. So this is the new things which has been brought up in the ITRs. Now, with respect to by reporting the date of acquisition of the property, the dispute regarding what is the date of acquisition will still prevail. we have decisions where even allotment letter can be said to be, kind of acquiring a property. There are decisions where it is mentioned that possession hona chahiye, only then it is acquisition. There are decisions which says that payment pura ho jane ke baad, substantial payment hone ke baad, the transfer will attract. So all this controversy will still exist. So while reporting the date of acquisition, you have to take care ki bhai aap kaun sa date le rahe ho. Okay, that is one of the point which needs to be taken care of. The CII for FY 21-22, that is assuming 22-23 is 317, just for the purpose of calculation. Details in respect of cost of improvement, even this was one of the field which was required to be directly reported up to last year. I mean, you have to directly enter the amount of CII, cost of index cost of acquisition directly. Now in this year, because they are asking you dates, okay, and as well as the amount year-wise, the ITR utility itself will calculate the cost of index cost of acquisition for you. The additional requirement is just that you have to report year-wise improvement which has been made in that particular asset. So that is the addition which is made in this particular ITR. The bottom highlighting which I have done, year-wise improvement, you have to mention the details. That's it. Yeah, slump sale. Now Finance Act 21 had brought about an amendment in section 50B with respect to the full value of consideration. Prior to that, the FVOC in respect of slump sale used to be the amount which was generally mentioned in the slump sale agreement. If I am entering into a deal of say rupees 10 crore, and against that 10 crore, the particular buyer is giving me, bank check there at 10 crore, then that will be my FVOC. That's it, simple. Now after the amendment, they have brought in ki bhai, the FVOC will be FMV, fair market value. Now, fair market value of what? For this purpose, they have provided rule number 11 UAE. In rule 11 UAE, again they have two criteria. Whichever is higher, that will be your FVOC. So what are those two criteria or the calculations? The first calculation is based on the fair market value of the capital assets and book value of your book assets. So it is nowhere traveling to what is the actual agreement value. Nothing. You just see कि भाई आपने जो transfer किया asset उसका value क्या था. So if it's a non-capital asset like debtors etc., then it will be the book value. Whereas if you are transferring any kind of share security, mobile property, in that case you have to get it valuation done. और उसका fair market value जो रहेगा that will be added up to the FVOC, FMB. So that will be your first calculation. And second calculation will be the actual amount which you have received from that particular buyer of slump sale. In that case also there can be two scenarios. One where there is only pure monetary consideration. By bank mein mujhe 10 crore rupiya aa gaya, so that is 10 crore. That is my FMB for second condition. Whereas there can be also be non-monetary considerations. Is for example 10 crore bank check के साथ मुझे एक factory building भी वो लोग दे रहे हैं. So I'll have to get it valued. Okay, uska FMB जो रहेगा, that is non-monetary consideration. Again, if someone is giving me shares and securities, then also that particular FMB of that shares and securities will be considered for my FVOC. So higher of this will be considered as FVOC for the purpose of section 50B. In the ITR, they have provided both of this. You have to report the amount under rule 11 UAE. Okay, both of these amount are required to be reported, and accordingly the utility will take up the higher of them. So again, an additional reporting requirement in the ITR. ITR 2 and 3, taxability of interest on provident fund. Again, important amendment which was brought up. Generally, as we all know, income from provident funds are exempt under clause 11 and clause 12 respectively of section 10 based on the nature of that fund. Now what they have provided is that if the assessee is contributing an amount which is exceeding a specified limit, then the interest on the amount in excess of that particular specified limit will be taxable, and the interest accrued on the amount up to that specified limit will still be continued to be exempt. So they have classified this fund into two categories. The first fund is the fund where even the employer is contributing as well as the employee assessee is contributing. For example, employee provident fund. In such cases, they have provided that जो employee का contribution रहेगा, वो 2,50,000 तक अगर उसने किया है, उसके ऊपर का जो भी इंटरेस्ट रहेगा दैट विल बी एग्जेम्प्ट. बट इफ इज कंट्रीब्यूटिंग मोर देन 2,50,000, तो ऊपर का जो एक्सेस अमाउंट है उसके ऊपर जो इंटरेस्ट है दैट विल बी मेड टैक्सेबल अंडर IFOS. So simple example, if I take up, if I'm falling under the first category and I've invested say rupees 3 lakh, then interest on 2,50,000 will be exempt and interest on 50,000 will be taxable. That's it. The second category is the category where employer is nowhere involved. It's a, say for example, PPF. Even though in PPF they are not allowing more than 1.5 lakh to be contributed, but even other registered funds are there where you can contribute. So in such case, the limit is 5 lakh. So if I'm investing rupees 6 lakh, then interest on up to 5 lakh rupees is exempt, but interest on that 1 lakh rupees will be taxable. So in order to have a bifurcation ki bhai taxable component kitna hai, non-taxable component kitna hai, they have provided a new rule, that is rule number 9D. Rule number 9D itself provides that wherever, in a particular fund, you have to make a classification कि by taxable contribution कितना है, non-taxable contribution कितना है. Generally, I think it is made by the fund themselves. Now, under this rule 9B, they have provided the formula कि what will be the amount of contribution which is taxable, which is non-taxable. The very first component, or the first criteria of non-taxable contribution, in that very first line which I have highlighted in green, is balance as on 31st March 21. That's a good thing, because आपका 31st March 21 तक का जो भी balance रहेगा आपके provident fund में, that will continue to remain exempt. I mean उसके ऊपर कितना भी interest आने तो वो exempt ही रहेगा. It will never be taxable. Now after 31st March 21 आप contribute करते हो, after that your contribution को they will classify under exempt category and non-exempt category. So अगर 2.5 लाख का limit और 3 लाख आपने contribute किया, तो 2.5 lakh will be credited in the non-taxable portion and 50,000 will be credited in the taxable portion. Accordingly, इसके ऊपर जो interest आएगा, that will be the balance amount, and उसके ऊपर का interest जो रहेगा, that will be classified as exempt or taxable. So yes, in the ITR, they have provided this particular fields wherein you are required to report कि by exempt वाला category कौन से category में आ रहा है, and if it is taxable, you have to report it in the IFOS. So this was with respect to the taxability of provident funds. A small change in ITR 3, a new schedule has been inserted, ATGGA. Now, what is ATGGA? ATGGA provides that an individual, if they are contributing to any kind of research association or rural development, etc., which generally are covered by section 35, 35D, etc., in that category, then such individuals, who are not carrying on business, can also claim deduction in respect to the contribution made to that particular research center or organization. Now, subsection 3 of ATGGA provides that if that particular assessee is earning income from PGBP, then this particular benefit will not be available, because उसको already 35 वगैरह में मिल सकता है, वहाँ पे वो deduction ले सकता है. Now, this was creating a trouble for the partners, especially I can say sleeping partners, because sleeping partner used to get only profits from the firm, no interest, no remuneration, nothing. They were not even carrying on any business in that particular firm. However, they are required to file ITR 3, and ITR 3 is mandatorily only for the person who are carrying on business profession. So subsection 3 was getting attracted, and hence this particular benefit was not being claimed. They were not able to claim this particular benefit in ITR. So in order to remove this hardship, now they have provided a new schedule under ATGGA, that is schedule ATGGA, whereby even the partners who are sleeping partners who are not earning anything other than profits from that firm can also claim deduction if they are contributing to that specified organization. So this schedule is required to be filled up. A simple schedule, PAN number, name of the donee, as well as the amount, mode of donation, very important, it is required to be reported. Yeah, section 43B, that is deduction based on your payment basis, especially with respect to the statutory dues and other kind of things which have been now enlisted. Finance Act 2019 had brought up an amendment that even if the interest is payable to an NBFC or systematically important non-deposit taking NBFCs, then even such kind of interest will now be covered by section 43B. So you will be able to claim deduction only if you are making actual payment of that particular interest. So this was brought in Finance Act 2019. So in the last year's ITR, they had provided a new column for disallowance. कि भाई आपका accrue हो गया है, आपने claim कर लिया in PNL, but you have not actually paid it. You have to disallow it. So that particular line item was given in the ITR. In current year's ITR, yes, they have given a new line item for allowance of the amount which was disallowed in the previous year, but it has been paid during this particular year. So if you have paid that unpaid amount in this particular assessment at 22-23, then in the ITR, they have provided this column whereby you can claim the deduction of that amount paid. That's it, a small change. (44) Viso to clause A, subsection 1, 44 that if the turnover is between 1 crore and 10 crore, then the assessor is not required to get his accounts audited, provided that the cash receipt or cash payment does not exceed 5% of the total receipt and total payments. Now, at that point of time, they had only used the word cash, nothing else. Now, Finance Act 21 had brought up an amendment कि भाई cash के साथ आपको 5% वाले category में you also have to include non-account pay check as well as demand drafts. So this has to be taken care of. Whenever you're calculating that limit of 1 crore, 10 crore, and you also have to sum up the non-account pay check, etc. things. It's a clerical thing, but yes, it is required to be reported. So a small change with respect to that amendment in the ITR. I have highlighted it. Schedule EI, again a small change, mere disclosure change, I can say. This particular line item which I have highlighted over here, it is newly inserted. It provides that the income which are earned by specified business trust or venture capitalist or such kind of InvITs rates which are exempt in nature, or income which is earned through pass-through entities which are exempt, which are now required to be separately reported under this particular schedule EI. Earlier this category was not there. So now you have to separately report it if you are having income from any of these particular sections. So that is again a disclosure change. 115 BAC, that is nothing but alternate scheme of taxation in case of individuals. You know that you can opt for an alternate taxation scheme, especially in case of assessee or carrying or business and profession. Then they are also required to file a particular form. And that form has to be filed within a particular timeline. Only then you can avail this particular benefit. Now, once you have opted that particular form, particular scheme, you cannot opt out. But in case of individuals, they have given that you can opt out only once. But then you are not eligible to re-enter that particular scheme unless your income itself is shut down. So, in order to have a track कि भाई assessee ने properly time पे वो particular form file किया था या नहीं, उसने opt in किया था या नहीं पहले वाले साल में, और उसने कभी opt out किया. In order to have track on this particular aspect, they have brought out this particular line items in ITR. You have to report whether you have filed your 10I form for EY 21-22 and whether you adopted for it or for it. If yes, if you say yes, I adopted it, then you have to choose whether you want to continue to opt or you want to opt out. If you say no, I had not opted in EY 21-22, then they will give you option whether you want to opt in now or you are not willing to opt for it. Accordingly, अगर आपने पहले opt किया हुआ है, then you have to give the details of the date of filing form 10I as well as the acknowledgement number. Please remember to answer correct date over here. क्योंकि अगर यहाँ पे date में गड़बड़ की, then they will say that you are ineligible because आपने after time file किया है 10I. So this date is required to be properly filled up. Similar aspect in corporates, section 115 BAA and 115 BAB, alternate scheme of taxation for domestic companies as well as domestic manufacturing companies. Identical condition was that you are required to file form 10IB, 10IC, ID, etc. These forms are also required to be filed within a particular time limit. After that, if you are filing, then you are not eligible. So in order to have a track कि भाई आपने बराबर proper filing किया है नहीं, and in order also to have a track कि भाई whether have you opted in or opted out. So once you opt out, you are gone forever. You cannot re-opt again. So again, they have brought this particular changes in the ITR whereby you are required to report whether you are opted or not. If yes, you will have to give the details of the forms as well as the acknowledgement number and the date of filing that particular form. So this is just again a disclosure requirement in the ITRs of EY 22-23. A change in ITR 6, that is with respect to unincorporated entity, investment in unincorporated entity. In case of partners, we used to report by in what all forms I am a partner and what is my capital balance, what is my profit sharing ratio, what is the amount of profit. No such schedule was there in ITR 6. In ITR 3, the schedule was already there. So now identical schedule they have inserted in ITR 6 also for the corporates, for the companies to report in what all kind of unregistered entities or unincorporated entities they are having interest in. So it can be a partnership firm, it can be a AOP, etc. They have to provide the details of the name, PAN, what is the type of entity, whether that entity is required to get their accounts audited, whether transfer pricing provisions are applicable, what is the amount of profit, what is the capital balance. All this reporting requirement which are there presently in ITR 3 are now required to be reported even for ITR 6. Again, a disclosure requirement. So now we come to an interesting topic of taxability of ESOPs. Now, ESOP in general, we'll talk about first. Whenever a company is allotting shares to its employees at a discounted price, that discounted price is taxable as perquisites. This is nothing but our ESOP concept. So that discount which the employee are receiving is nothing but a benefit which they are receiving from their employer, and hence it is taxable as perquisite under section 17 subsection 2 clause 6. Now, as per the general provisions, this particular taxation will take place in the year of allotment of shares. So जिस साल में उस एम्प्लॉय को शेयर्स मिले उस साल के ITR में उसको वो perquisite का वैल्यू दिखाना है और उसके ऊपर टैक्स पे करना है. Now what will be the value of perquisite? As we all know, it will be the amount, FMV or the value of that shares on the date of exercising the options. So there are various stages in ESOP: granting, vesting, exercising, allotment. So exercising जब किया था उस टाइम पे क्या FMV था minus the amount which they have actually paid, that is the amount of perquisite which is required to be reported as your income in the ITR of the year in which the shares are allotted to you, as well as you have to pay the tax on it in the year of that particular allotment. Okay, so this is with respect to taxability of perquisites in general. Thereafter, if that particular employee is selling that shares, then obviously उसके ऊपर capital gains का जो है, that is the second part, capital gains आ जाएगा. In that case, the cost of acquisition will be the FMV as on the date of exercising. However, in case of eligible startups, so eligible startups के लिए the employees, they have been given option to defer the payment of tax. Similar concept. However, in the ITR of the year in which they are allotted the shares, they have to disclose कि हाँ भाई हमको ये perquisite value मिला है. It will be added to their total income also. However, the tax on it, जो tax बनना था उस particular amount पे perquisite पे, that can be deferred to some future years up to some extent. That is the facility which has been given only to the employees of eligible startup and no other employees. So in this case, what is the period up to which it can be deferred? The payment of tax can be deferred. It can be deferred up to within 14 days of the earliest of the following. The first is 48 months from the end of the relevant assessment year. That is the maximum deferral period which is allowed for the payment of tax. Second is cessation of employment. That is, if I'm quitting the job, yes, I will have to directly pay the amount, whatever I was deferring up to these years. And in the last case is sale of the ESOP. If you're selling the share, then proportionate amount of tax which was deferred by you, that has to be paid off now. So earliest of the following. Now, in order to report all these things, they have come up with this entire new schedule, that is tax deferred on ESOP. Now, this particular schedule will be dealing with this in bits and pieces one by one. Before that, I'll just take an example of AY 21-22. Say suppose in AY 21-22, I had received this ESOP and the perquisite value of that particular ESOP was say rupees 10 lakh. 10 lakh के ऊपर मुझे on estimated basis 3 lakh rupees payment आ रहा था tax का. So I have to report that 10 lakh in my ITR of 21-22. Yes, I had reported. Okay, I had shown it in my total income. But tax on that is rupees 3 lakh. There was an option to defer it. So मैंने option को avail किया. I had deferred it. So 3 lakh rupees was the amount which I had not paid in the last year. So that amount is required to be reported over here. कि भाई last year से आपने कितना brought for amount ये साल लेके आए हो. After that, you will have to tell कि out of this amount of the perquisite, what is have you ever sold any of these shares, or have you quit your job, or whether that 4 years is expired or not. So this is required to be reported. So say suppose for example, I have sold out of the 10 lakh perquisites, I have sold half of it. So 5 lakhs I have sold it. So now I will have to pay tax on that portion which I have already sold. So अगर 3 लाख मैंने brought forward किया है, then 1,50,000 I have to pay in this AY 22-23, and the rest of it I can carry forward up to a maximum of 4 assessment years. So this was with respect to brought forward ESOP deferred tax. Now, if I take an example of current year's perquisite, say suppose in current year my basic salary is rupees 40,50,000. The perquisite value is around 90 lakhs. So my total income is 1,30,50,000. Again, I repeat, total income में से deferral नहीं हो रहा है. Income is not getting deferred, only payment of tax is getting deferred. So my total income will also show as 1,30,50,000. Okay. So now what is the amount which I can defer? A simple mathematical formula. You have to calculate the tax on 1,30,50,000. उसके ऊपर जो tax आएगा, that has to be divided in the proportion of the actual amount of salary divided by the total amount of income, that is 1,30,00,000. Only that is the amount which you are required to pay in this year. So 90 lakh के ऊपर का जो proportionate tax आएगा, you can defer it. So in this particular example, 1,30,50,000 पे total tax आ रहा है 44,40,150. This is divided in that particular ratio, and 90 lakh के ऊपर आ रहा था 30,73,950. Now I can defer it. I'm not required to pay that, but yes, income will be shown in this particular year, even 22-23. So in this case, we just have to take care कि भाई आगे जाके ऐसे deferment हो रहा है, ESOP है, startup है, नया employee है, they should have the liquidity कि भाई at least 4 years, after 4 years he is mandatorily required to pay that amount. So liquidity का एक point है जो should be kept in mind for such kind of assessees. So yeah, this is the entire schedule. यहाँ पे जो first category था, if I have brought forward 3 lakh, I have partly sold it, 1,50,000 का payment करूंगा मैं ये साल, और 1,50,000 मैं carry forward कर रहा हूँ. ये साल का जो perquisite मुझे मिला था, I am deferring it in entirety. So entire 30,73,000 is getting deferred. Yes, please.
I had a query.
Yeah.
For example, ESOP का जो perquisite है,
Yes.
अगर वो मुझे shares मिल रहा है,
Yes, definitely.
या
Definitely.
वो हमको भरना होता है as an employee.
Yeah. So, as you said, definitely the perquisite value is there. It will be included in your salary income itself, and TDS is required to be deducted by the employer. And this particular amendment has been brought for eligible startup. If you see my slide, I have mentioned that amendment in section 148, 156, 191, and 192. So in such cases, yes, the employer अगर वो उनसे declaration लेना है कि मैं आपको defer करना है या नहीं करना है. If the employee is not deferring, then yes, employer will have to deduct the TDS. Okay, now we come to the third part of this particular presentation. Other changes, small changes. Section 80 IIB, industrial development, other sort of benefit schemes which were there for certain kind of industries like telecommunication, power generating plant, cross country, natural gas, multiplex theaters, etc. Generally 8, 9, 9, 10 में आए थे ये सारे, और उनको 15 साल के लिए दिया था. Sunset clause was expiring in EY 21-22. It expired actually. So these line items in the forms which which you used to enter the amount in that particular field कि भाई ये हमारा industry है, then this is the amount which we are claiming. So now they have been done away because already sunset clause has expired. Just a presentational change, nothing else. So these kind of categories of industries are now removed from the Schedule 80 IAIB. Schedule OS, other sources, there is line item which are inserted wherein you are specifically required to report in case of non-resident if they are earning interest income from bond purchase in foreign currency, or they are earning dividend from GDRs purchased in foreign currency. This is only in respect to non-resident. In law, but पहले clubbing पूरा एक साथ में जाता था balancing की वजह से. Now we have to separately report it. Just a procedural requirement. 153A, 153C, as we all know, now it is clubbed in the provisions of 148 itself. So earlier in the ITR we used to have a drop down whereby we are used to select by 139. One के अंदर 153A was the option, 153C was the option. So now they have removed that particular option because now everything is under 48. So just a small presentational change. This particular slide, I have intentionally kept it only one slide. Section 9B, Section 45(4)(a), Rule 8(ab). If I talk about law, an example of this particular provision, then I think kal ka bhi din yahan pe jayega. So I've restricted this only to one slide to say to you that if in the assessment year 21-22, as per Rule 8(ab), if you have any kind of amount which is attributable to the capital asset as per Rule 8(ab), then and that particular capital asset is sold in assessment year 22-23, then against that, as per clause 3 of section 48, you can claim the deduction as your cost of acquisition or cost of improvement. This new category has been inserted, that is your cost attributed to the capital asset pursuant to the provisions of section 9B, 45(4)(a) and Rule 8(ab). So this new line item which has been added, अगर 22-23 में ऐसा sale हुआ है और उसको cost attribute किया है, then you can claim the deduction in this particular line item. So that's it. Now, other important amendments of assessment year 22-23, even though they have been brought up by Finance Act 22 with retrospective effect. So we'll be considering it as it is important for ITRs of EY 22-23. The very first one, very important one, that is with respect to COVID relief, a very beneficial provision which has been inserted. So there are two amendments made. The first amendment is under section 17 subsection 2 and the other one is under section 56(2) clause 10. I have classified this entire concept into 4 parts, majorly 2 parts, and then there are 2 subparts. So the background of this is कि भाई कोविड की वजह से लोगों ने बहुत कुछ सफर किया है. There were ailments, there were illness, etc. Things were there. So people have come out and helped other people. Employers have helped their employees. Even certain trusts and institutions have helped the people for the COVID purpose. So for them, they have now made a provision कि भाई ऐसा कोई किसी से help मिला है, any amount which is received as a help, then in such cases that amount will not be chargeable to tax, subject to certain conditions. So now first category is the category where, say suppose there is a person named Mr. A who is an employee of a particular organization. Now in general, as per section 17 subsection 2, whenever the employer is giving any medical benefit to that particular employee, it will be considered as perquisite and it will be taxable. But now they have provided a proviso over here. The first proviso, वहां पे उन्होंने amendment डाला है कि if the employer is paying you for the actual amount of medical expenditure incurred by that particular employee for the illness relating to COVID-19, then in such cases that amount will not be considered as your perquisites. Now that amount can be received either for the treatment of the employee himself or it can be for the treatment of the family members. There are certain conditions which the government will notify. अभी तक कोई notify नहीं किया है. There is no threshold, so whatever help you are receiving from your employer with respect to the medical expenditure, actual medical expenditure, there is no threshold to it. Okay, so whatever amount of medical bills you produce to that particular employer, they will give you, but it has to be actual amount of medical expenditure. Now the terminology used over here is illness relating to COVID-19. It's not only for COVID-19, relating to COVID-19. So as we all have seen that various kind of diseases which were running parallel because of COVID-19. Some had some kidney issue, some had some lung issue because of COVID-19. So the use of the word relating, I think, is it has a broader aspect. It has to be considered in a wider sense. It's not just COVID-19, but उसके साथ साथ अगर कुछ हो गया, kidney failure हो गया, तो उसके लिए भी treatment अगर किया, even that has to be exempt in my interpretation. So that is the change in the case where I am alive. The first category is I am alive and I have received this help from my employer. So that will obviously be under section 17. Now second part is the case where that employee is expired because of COVID-19. In such case, obviously the help from my employer will go to the family members of that particular employee. So it will not be covered by 17, it will be naturally covered by section 56 to 10. So in that particular section also they have brought up an amendment कि भाई ऐसा है कोविड के लिए अगर किसी का डेथ हो गया उनके एम्प्लॉय का और उसके बाद कुछ कंपेंसेशन मिल रहा है, हेल्प मिल रहा है, then in such cases that particular amount will not be chargeable to tax under 56 to 10. So again the same condition, the amount has to be received from the employer of the deceased employee. it has to go to the family members of the deceased employee. There is no threshold, any amount can be given. हाँ, यहाँ पे कोई actual medical expenditure वगैरह का कुछ खर्चा prove करने की जरूरत नहीं है. It can be kind of help or compensation to the dependents of that particular employee. So amount can be anything over here. In the first category, it was the actual amount of medical expenditure. So same way, sum paid by the employer to the family members because of the death of the employee due to illness, again relating to COVID-19. Okay, so anything that which is on account of illness, then yes, it can be, it will be exempt from tax. The condition is that that amount has to be received within 12 months from the date of the death of that particular employee. So 12 महीने के अंदर अगर आपको मिल जाता है, then yes, that amount will not be chargeable to tax. So this is the beneficial provision amendment which has been brought up by Finance Act 22. Now I move on to the next category, that I am receiving help from any person. Any person, for example, say from my friends, or some from my कोई दूर का रिश्तेदार, or anyone from a trust or an institution which are helping the dependents of the person who has suffered COVID-19. So in such cases also there are two kind of criteria. In case where first is the criteria where that particular assessee is alive, and the second is the criteria where the assessee has already expired. So say suppose I am a person who has been infected with COVID-19. Now I am receiving help from my friends कि भाई तेरा जो भी मेडिकल खर्चा है मैं तुझे देता, you can just go and do your treatment. So even in this case there is no threshold, whatever help I receive, but it has to be for actual medical expenditure. It's not a compensation, it's not a extra help. It's only restricted to the actual medical expense. That's it. So if I'm receiving it from my friends, then yes, it will not be chargeable to tax under 56(2)(10). There is no threshold limit. Any amount can qualify for this particular exemption. Second category, where a person is receiving help from friends or relative, however that person has expired, so that help is being now given to the family members of that particular deceased patient. So the conditions are, it can be from any person or other persons, any other person or persons. So you can receive help from any person, any other persons. The help has to be given to the family members of that particular deceased individual. However, there is a threshold. So यहाँ पे threshold है of rupees 10 lakh. So whatever help you are getting from any trust, from your friends, okay, this is not for medical expenditure. बंदा गुजर गया है, he is expired. Now they are helping that dependents. तो उसके लिए maximum 10 lakh तक का amount will be exempt, और उसके ऊपर का amount will be taxable under 56(2)(10). Again, the cause of that should be relating to the illness relating to COVID-19. Same condition, the amount of compensation or help should be received within 12 months from the end of the relevant from the date of the death of that particular person. Now, there is one thing which I like to point out over here. If you see the first part, where the person is alive in case of medical expenditure, no threshold, any amount is fine, but it has to be actual amount. वहां पे they have used the word sum received from any person, singular form. Whereas in the second category, they have used the word from any other person, that is other than employer, or persons, plural form, persons. So in the second category, when there is death, you can receive help from multiple sources, and that will be exempt subject to the limit of 10 lakh. However, in the first case, in the medical expenditure case, there is no threshold. You can receive any amount, but the word used over there is any person. So if I have 3 friends and all of the 3 are willing to help me out, okay, and they are giving me money, but as per the express provision in the wording used in the act, I can claim the exemption of this particular section only in respect of the amount which is received from only one particular friend of mine, because the word uses person. So other amount which I am receiving from other 2 friends, that could be made taxable. I don't think so. This should be the intention of the law. I don't think so. But as per the express provision, this can be an interpretation which may be taken up by the assessing officers. So yeah, that's a matter of interpretation, nothing else. So overall, yeah, it's a good provision which has been inserted. Yeah, please. Yes, please. Okay. Okay. Yeah. Yeah.
So how is it going to be?
Yes, ma'am. So again, this particular interpretation issue will come. So if they are writing the word any person, so say suppose there are 3 friends and total expenditure is 1 lakh. One is giving you 30,000, other is giving 40,000, and the third one is giving again 30,000. But as per the express provision, I can claim this benefit only from one person. It's qua person. Okay. So in that case, yes, I will again say कि actually ये intention नहीं है, but provision ऐसा बोल रहा है. Even though it is less than that particular amount. But yeah, I think this is something which needs to be taken care of in the amendment. I mean, next year's amendment. Yes, sir. Yes, I'm coming to it. I'm coming to it, sir. So yes, as rightly pointed out, I have also highlighted it's family members and not relatives. So the amount for the treatment of family members and amount should be received in case of compensation or help by family members, not relatives. Relatives are defined under section 56(2)(7). Relative has a very broad scope. बहुत सारे लोग उसमें आ जाते हैं. Whereas in case of family, it is only spouse, children, parents, brothers, sisters of that particular individual who are wholly or mainly dependent on that individual. So this is the third category, that they should be mainly and wholly dependent on that particular assessee. Okay, so these are the family. Yes, sir. Yes, sir. Yes. 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 Yes, sir. That is one of the points which can be taken care of. Definitely. Yes. Yes. Because that is an express provision which provides you the particular exemption. Yeah, no, you're correct, sir. Correct. Express will always override the general. Yeah, so with respect to family also, you have to take care that it's not relative, it's family. So accordingly, the scope of the family members will be restricted to only these categories. 14A, again, a very disputed section. Section 14A, in case earlier we had decisions wherein it was provided that if the particular assessee is not earning any exempt income, he has not earned any kind of exempt income, then in such case, section 14A will not apply. I have listed some decisions over here. So now they have brought up with a retrospective amendment, a clarification or explanation, which says that irrespective कि भाई आपने actual exempt income earn किया है या नहीं किया, whether it has been paid to you or not, whether it is accrued or not, whatever it is, still if you have incurred an expenditure in relation to earning that particular exempt income, it will have to be disallowed under 14A. So this is again a retrospective amendment. For this year ITR, it is important because up till now we are taking a stand based on the decisions of Honorable Supreme Court or High Court, whatever. कि भाई अगर exempt income earn नहीं किया है, भले अगर expense किया भी हो actually, then also it is not disallowable because exempt income earn नहीं किया. That is the first condition. But now they have specifically provided कि अगर आपने exempt income भले earn ना किया हो, but if you actually incurred expenditure in relation to that particular exempt income, yes, you are required to disallow that particular amount under section 14A. So that is one of the things which has to be taken care of. Section 37, explanation that if you are incurring an expenditure which is in relation to or it's for the purpose of any kind of offense or for any event or any purpose which is prohibited by law, then yes, it will not be allowed as your business expenditure. They have widened the scope of that particular explanation or subsection retrospectively, and they have now provided that expenditure incurred for any purpose which is an offense or which is prohibited by law shall be deemed to have always been included the expenditure incurred by the assessee for the following purpose. The very first purpose is for any purpose which is an offense under which is prohibited by any law for the time being force in India or outside India. So if there is any offense or if there is any prohibition by law, whether it can be Indian law or foreign law, और उसके लिए अगर आपने कोई खर्चा आपके PNL में डेबिट किया हुआ है in relation to that particular offense, then in such cases, no, it will not be allowed. Second one, we recently had a Supreme Court decision just a month back that the pharmaceutical companies giving freebies to doctors will not be allowed as expenditure. So in line to that particular decision, okay, this particular amendment has been brought in retrospectively, providing that when a company or any entity is giving or is paying or incurring expenditure for giving freebies to the professional, to any professional who are covered by any code of conduct. It can be doctors, it can be CAs, it can be anything. So if they are covered by some code of conduct, and as per that code of conduct, it is not allowed to accept such kind of freebies, and if the pharmaceutical companies or such kind of entities are incurring expenditure for giving them freebies, then such kind of freebies will not be allowed as your business expenditure. So this has been inserted in the section retrospectively. Second, if you are incurring any expenditure to compound an offense under any law for the time being force in India or outside India, as we all know, most of our criminals are outside India now. So for that particular purpose, they have inserted this specific lines that if you are paying and incurring any expenditure for compounding any offense, whether it can be in India or outside India, such kind of compounding fees or any other expenditure which is in relation to that compounding will not be allowed as your business expenditure. Again, a retrospective amendment. Section 79A, again, an interesting section. I'll explain this with the help of an example. Say, suppose, for example, I am in a business of jewelry manufacturing, diamonds or gold, whatever you say. I have brought forward business loss, legitimate brought forward business loss of, say, rupees 20 lakhs for EY 2023. Now, in this particular year, there is search or survey proceeding in my premises. During this search and survey proceeding in my premises, they find out that there is some undisclosed income or undisclosed stock lying with me, which I have not disclosed. So now the assessing officer generally will do one thing. He will make the addition under section 68 to 69D. Now, once the income is added under this particular section, provisions of section 115 BBE will be attracted. So there is a specific amendment which was brought, I think, in 2019, which provided that against, if you are having any income which is from which is added under section 68 to 69D, then against such kind of addition, such kind of income, you cannot set off your brought forward losses or any expenditure. So this particular aspect was very clear under section 115 BBE. Now there came a lot of decisions, especially when Mumbai tribunal decision is there. In case of a jeweler, when there was undisclosed stock found, the tribunal said that addition cannot be made under 68 to 69D, addition has to be made under PGVP. So addition was made under section 28, that is your chapter 4D. Now once the addition is made under chapter 4D, I can definitely set off the brought forward losses against that particular undisclosed income which was found during the course of search proceedings. So this was a loophole which was there in the act. In order to plug in this loophole, they were brought in this particular retrospective amendment, stating that even if now the particular undisclosed income which was found during the course of search, even if it is treated as a PGVP income, you cannot set off your brought forward losses against this undisclosed income, even though it is classified under PGVP. So this was an example to understand this particular retrospective amendment. Again, a retrospective amendment with respect to claiming the expenditure with respect to cess on the income tax. Cessa Gold Bombay High Court allowed it, कोई problem नहीं, you can claim it. A lot of people did. EY 21-22 में लोगों ने claim किया. This year they have brought in this retrospective amendment कि अगर आपने cess claim किया है, then it is not valid. It will be considered as underreporting of income, will levy penalty on that particular amount. So already EY 21-22 में Cessa Gold decision था. Based on that decision, I took this deduction of the cess amount, and now they are coming up with this retrospective amendment. If you claim that cess amount as deduction, will treat it as underreported income and will make you pay penalty under section 270A. So either you pay penalty under 270A, or the option given to us is now 155(18) clause 18. You go to assessing office and get your return rectified, pay taxes on that. So yes, even this is something draconian. How can you levy a penalty on an amount which I had claimed based on a decision of jurisdictional high court? So this is something, again, a matter of interpretation. I think cases will come up जहाँ पे इसके ऊपर भी cases आएंगे. How can you levy penalty, or how can you even make such amendment by levying retrospective penalty on a transaction which was based on decision of Honorable High Court. So this is one of the things. Now in current year's ITR, you will have to take a stand whether you want to claim deduction of cess or not. The last part, section 80 EEA, very small change, not relevant, especially in city of Mumbai. 80 EEA provided that in case a person is buying a house for the first time in his life, so if it is first house, I can say, then in such cases, he can claim deduction of interest on the loan which he has borrowed up to an amount of rupees 1,50,000, interest amount of 1,50,000. The condition was that the loan should have been sanctioned between 1st of April 19 to 31st of March 21. Now they have expanded this sunset clause to 22. So now all those assessee who have availed loan, I mean sanctioned, the loan has been sanctioned even during AY 22-23, that is financial year 21-22 also, they can claim benefit of this particular section. However, this section itself specifies that there should not be double deduction. Same amount का 24 में और यहाँ पे आप claim नहीं कर सकते. However, it can be over and above the amount which is claimed in 24. So, for example, total interest is rupees 4 lakh. So 2 lakh I can claim under 24 allowed. So 4 lakh में से 2 lakh चला गया and 1,50,000 I can claim under 80 EA. That is fine. That is fine. However, say suppose interest ही मेरा है total 1,50,000. So I cannot claim obviously 1,50,000 under 24 also and under 80 EA also. That is double deduction. That is not allowed. So yes, that's it with respect to this particular section, as well as with respect to this short presentation on the entire topic of ITR and the changes made by the Finance Act 2022. Yes, ma'am, please. Yes. PF, no. In my opinion, the employer cannot deduct TDS on that because that is coming from that particular fund. The interest amount is getting taxed. Yes, that will be under IFRS, no? Yes. No. That is that is interest from that particular fund. Yeah. No. It's only with respect to employees' contribution, not with respect to employers' contribution. Yes. Any other question we can take? Yes, sir. Please. SCP. Yes, sure, sir. Yes, sir.
The second condition regarding the
Yes, sir.
in any particular year, there has discontinued the service.
Sir, in my opinion, if I go by the intention, if any point of time during that particular year your users are more than 3 lakh, then this condition will apply. Because they are concerned with कि India से कितना revenue generate हो रहा है. हाँ, मैंने एक महीने के लिए subscription can be for 1 month, 3 months, or 6 months, or 1 year, whatever it is. But once that limit of users has crossed 3 lakhs, then yes, this SCP will apply according to me.
Sir.
Yes, sir, please.
In respect of
Sir, as I told you in rule number 9D itself, they have provided that within the fund, they will be segregating the fund as taxable portion, non-taxable portion. So the fund itself will give you the figure, what is the amount of taxable, what is the amount of non-taxable. And even otherwise, they have given the formula in rule 9D.
we have to take the passbook from the.
Definitely, yes. But one thing is, as I told you, the balance up to 31st of March 21 is anyway exempt. उसके ऊपर का interest तो आपको exempt ही रहेगा. So now from this year, even you can maintain a record कि by total कितना contribute किया है. You just have to split between two amounts. That's it. But according to me, I think fund will provide this details.
So we have to take the peer passbook.
Yeah.
Sir.
Yes, sir. Interest, sir, that will be from your, that will go in IFOs, no, sir? That will go in IFOs, I think. Because employer is not giving you that interest. The fund is giving you that interest. Yes, ma'am. So again, ma'am, this schedule AL is again a reporting schedule. In my opinion, this is a reporting schedule. This is nowhere relating your to section 48 or 49 or even 55. According to me, it has to be cost of acquisition, because as far as I remember, in the instruction module of the last year, schedule AL, they have specifically provided that in schedule AL, you have to report only the cost and not FMV of any kind of asset. I'm sure about it. Yes.
So any changes in ITS?
Yes.
ITS 7, there are major changes.
Yes, yes, true. I have not covered it up in this particular presentation. Some couple of things is with respect to aggregation of the amount, the limit from 1 crore to 5 crore in case of amount which is received by certain kind of institutions. Those changes are there, but most of them are relating to law which has been brought up by Finance Act 21. जो law में amendment हुए थे उसका consequential changes are there in the ITR, wherein you are required to report कि भाई आपका limit 1 crore से 5 crore हुआ है. Okay, and related changes, but yes, definitely I have not covered in this slide. Certain changes are there, but the utility is also not yet out. According to me, एक बार utility आता है, उसके बाद भी changes ये लोग करते रहते हैं. So let's see what all changes they will come up, other than those changes which are there in the notified ITR. Yes, any other question with respect to this? Yeah. Naturally law. Instructions is a guidance for a layman in a very simple language. There is no section mentioned, nothing. They just tell you what you have to fill up. So even this instruction module, if I remember, of 2020 runs into 300 pages. So उसके लिए भी एक अलग से study lecture लेना पड़ेगा कि भाई instruction module में क्या क्या दिया है. The things are there, but I think ये साल का जो instruction module अभी तक तो आ जाना चाहिए था, आया नहीं है. Yeah, definitely, anytime. Yeah, even you must have heard of the recent judgment in case of bullet train. Bombay High Court decision in case of bullet train, where capital acquisition, compulsory acquisition by the NHRCL. Fortunately, I was part of that particular case right from the beginning. In that case also, what had happened was, in the ITR, that particular bullet train company, NHRCL, had deducted TDS even though it was exempted under section 96 of the RFTL Act. Now they had deducted TDS, so this assessee had to report in the ITR कि भाई मुझे TDS के बहुत बड़ा amount था, so अभी claim कैसे करें? Without filing ITR, without showing it as income, I cannot claim my TDS credit. So this was the only point why we had to approach the High Court. कि भाई first of all, that TDS itself is wrongly deducted because this is covered by section 96. So High Court said the same thing. It is covered by 96, and just because सामने वाले ने TDS काटा does not mean that you have to report in your ITR as your income when it is not your income. So yes, definitely law will always prevail over the forms and procedural aspect. We have Supreme Court decision on this. I think LIC का कोई decision है that form statutory forms will not override the law itself. Yes, members. Yes, please, sir. Sir, again, according to me, it should be considered like that. For non-resident, yes, according to me, there can be divergent views. Not that sure, but according to me, yes. I think you can get a reference from the instruction module, especially for non-resident. They have this sheet wherein they must have specified about, because in the bank account details in the ITR, in that particular schedule in the instruction module, I think definitely you will get the answer to this. Yes. Yes, ma'am.
There are certain scenarios where
Yes.
The payment is being made by just, and there is a clubbing of income. There's a
So again, this is a matter of, yes, yes, I got your point.
point of income tax only 1%.
Yeah. So again, this is a matter of interpretation. See, इसमें क्या होता है कि when we want to claim, interest reduction under 24B, हम बोलते हैं कि दोनों में लिया है, irrespective कि भाई एक नहीं payment किया है. And when it comes to capital gain, we want to claim cost of acquisition entire only in one case. So yes, again, this is something which is a practical aspect, depending on the. But yes, you have to take only one position, either of it. Generally, if I go by law, because the property is in the name of both of them, it should ideally be splitted, because there is no condition which says that कि आपको आपका payment के basis पे आपको मिलेगा deduction. It is on the basis of ownership in case of 54. Okay, so yes, but yes, there are decisions which allows both of them. If I talk about Schedule AL, they have specifically said that you have to report your cost of acquisition. But in this case, again, there will be a conflict. What is your cost of acquisition? What have you shown in your books? If you have shown a splitted cost, you have to go by that split cost. If you have shown entire cost as your own cost, then yes, definitely you can show the entire amount. Sorry, can you, yeah? Again, that will be dependent on the assessing officer, how they take it. Okay, because you take a particular stand, you have to be consistent enough. Okay, house property में जो stand लिया है वही capital gain में stand लो. I think that will be fair enough. But if you are yourself diverting, then in such cases they will have a divergent view. Not a concrete answer to this, to be honest. Yes, sir. Okay. Sir, Form 4 is not applicable to partnership forms. You have to file ITR 5 only. 5 is, I think, on 12th of June it is made available. 12th June, I think, sir. It's still not there? No one can help you, sir, except for the department. ITR 6 is not there. ITR 7 is not there. In the ticker which they have given in the income tax website, they are showing that we have enabled ITR 5. I think that was first on 12th of June or 2nd or 3rd week of June. तभी ITR 5 first time आया था. तो वो भी offline utility, online utility तो है नहीं. We'll have to make a representation to CBDT. It's 1 quarter already gone. Sir, it's pan India. Again, Supreme Court can have a decision on this Article 142. CBDT आप अभी तक utility बाहर नहीं निकाला है. Yes, members. Any other questions with respect to this particular presentation? Thank you so much for this patient hearing. I enjoyed a lot. Thank you so much.
Thank you, Shashank bhai. Before we conclude our first session, we have with us the Joint Commissioner Sir Sanjay Nikam sir and Deputy Commissioner Sri Kishore Bhai Babul sir and Sri Janak Bhai Wagani. So we welcome all of them with a round of applause. There are a few announcements before we conclude our first session. Some of the questions were on the ITR 7. So immediately next month, we are going to have our full-fledged session on the trust and all the related matters, because there are drastic changes in the trust related provisions. So we are going to have the full session on the trust. On the 1st July, we are celebrating the Chartered Accountants Day. It is falling on the Friday. Immediately on the next day, on 2nd July, with the WRC, we are going to organize a mega blood donation in the health checkup camp. And we really thankful to the Kohinoor Continental Hotel. They have agreed to become a hospitality partner. So they are going to provide us this facility so that we can organize this mega blood donation in the health checkup camp. So we request all the members, and it is open for all. It's not only for the members and chartered accountants. It is open for all. So we request all the members, you can spread this message across to your well-wishers, your family members, and we request all the members to take the maximum benefit of this camp. In that, they are going to be eye checkup, they are going to be a blood test. So it is going to be a good camp rather. Taxman publications, we having the counter today, and they are giving us this special discount today up to 40%. So we request all the members to take the benefit of that books if anyone wants to buy any of the books. And if the books are not available, you can just place the order. They are going to arrange the books with the same discount. So that facility also they are providing today. On 3rd of July, we are going to have the sessions on the NRI taxations. CA Vyomesh Pathak is going to yeah. And with the NRI taxation on the 3rd July, the second session would be on the LLP. There are drastical changes in the LLP provisions also. So on the 3rd July, we are going to have the 2 sessions. One would be on the NRI taxations. Vyomesh Pathak, Chartered Accountant, he is going to have the sessions. And the second session would be on the LLP. So we request all the members to please attend on this 3rd July also. And now our regional council member, CA Pinky Kedia, madam, she also wants to announce something. So we request madam to please.
गुड मॉर्निंग आवाज नहीं आ रही है ब्रेक रेडी है गुड मॉर्निंग हाँ सो थैंक यू जयेश भाई टू गिव मी चांस फॉर सम अनाउंसमेंट आप लोग लाइक एवरी ईयर वी आर सेलिब्रेटिंग C8 फाउंडेशन डे इन आवर WRC ऑल्सो और वो हमारा घर का इवेंट है अपने सबका तो 1 जुलाई को BKC ICI टावर में कल्चरल प्रोग्राम है 6 PM से आप लोग सबको इनवाइटेड है अपने स्टडी सर्कल के कम से कम भी 30-35 बच्चे उसमें पार्टिसिपेट कर रहे हैं CAV नॉट ओनली बच्चे CAV तो हमारा काफी बड़ा ग्रुप है 30-35 लोगों का और फर्स्ट को जो है वो सिर्फ डांस प्रोग्राम्स है एंड थर्ड को सिंगिंग प्रोग्राम है थर्ड को जो है वो संडे को मॉर्निंग में है मॉर्निंग 10 AM से स्टार्ट हो जाएगा सिंगिंग का प्रोग्राम थर्ड को एंड फर्स्ट को शाम को है 6 बजे से स्टार्ट होगा आप लोग सब आएंगे तो उनको थोड़ा सा मोटिवेशन मिलेगा दे विल डांस विथ मोर एनर्जी क्योंकि क्लैपिंग मैटर करती है डांस के टाइम में तो नहीं उन लोगों को सुननी चाहिए सुनाई देनी चाहिए ना क्योंकि दे आर वर्किंग हार्ड दे आर गोइंग ऑफिस एंड आफ्टर ऑफिस दे आर डूइंग प्रैक्टिस so since 10:30 AM today also they are doing practice till 6 PM today so please motivate them and please come I am inviting from WRC side so please come thank you.
So now it's time to propose a hearty vote of thanks to our today's first speaker, CA Shashank Mehta. So I would like to invite our deputy convener, CA Purvi Bagaria madam, to propose the hearty vote.
क्या हुआ ज्वाइंट प्रोग्राम है तो आप लोग दिखना चाहिए देवी नगर और कैंसर पेशेंट सो प्लीज कम क्योंकि वहां पर अभी कोरोना की because I went there I had treatment from there कम आपके जितने भी रिलेटिव्स हैं फ्रेंड्स ask them to give their blood.
On behalf of the JB Nagar CP Study Circle of WRC, I would like to propose a very hearty vote of thanks to today's speaker, CA Shashank Mehta, for his session on latest changes in the ITRs. He has covered all the aspects related to ITRs and the latest amendments in the IT provisions, be it eligibility, the latest notifications that have come up, his clause-wise ITR revision. And thank you so much for your very detailed presentation and your deliberations. Thank you for attending to the members' queries. And I would also like to thank the convener for arranging the session, all the coordinators today for helping us out with the preparations. Thank you. Thank you so much. We can now break for breakfast.